Okay, we are recording. Hello again, everybody. So I am doing this recorded lecture for Chapter 5 of Cost and Managerial Accounting. And so Chapter 5 and Chapter 6, we're talking about process cost accounting. And so we'll get an introduction to it really and learn how to do the different journal entries for process costing and calculations and things like that. And then we'll get more into it in chapter 6. So, and my computer's doing something funky. I don't know if you guys can see this, but it's like it got these colors kind of appearing here. It makes the screen look funky, but I don't think it does it when I'm sharing my screen anyway. So I am going to share the PowerPoints with you. And then once I am finished with this, I will post the PowerPoints and the recorded lecture into OwlNet. So let me get this pulled up. All right. And what I ended up doing with this PowerPoint, because the original PowerPoint that came from your book was not very good and it didn't really show any examples. So examples of the calculation. So I ended up stealing or borrowing some of the PowerPoints from another textbook that I had used at Lindenwood before, because at least it shows some calculations, some examples in it. So we'll get some practice with these, of course, in class together and look at some examples in the PowerPoints here. So process cost accounting. We're going to see as we're going through this that a lot of it is similar to job order costing as far as the journal entries and how the materials and these costs move through the system. A lot of it is similar to the job order cost accounting, but just a little bit different with process cost accounting. So we're going to be looking at and talking about the differences between job order costing, process cost accounting, how we compute unit costs in a process cost system, how we assign cost to inventory using equivalent units of production, and then preparing this cost of production summary and the journal entries. So the major difference between job order cost accounting and process cost accounting is that with job order cost accounting, every job is different. Each job is unique. Every job has its own distinguishing characteristics. So the focal point in how we accumulate cost in a job order cost system is by focusing on the job, right? The focal point of a job order cost system is the job, right? So we accumulate material costs, labor costs, overhead costs per job, right? Every job is unique or custom. Every job is different. Every job is on a special order basis. So we accumulate costs per job. Whereas a process cost system is for a repetitive manufacturing process when the goods or services are of a similar nature, right? So the focus of how we do the costs and how we move the cost through the system with a process cost system is the particular departments or cost centers in which the costs are assigned. So I think in the example that your book talks about, and in the example we're going to see in the PowerPoints, we have a production department where they have a mixing department and then a roasting department, or a blending department and then a roasting department. So, each of those departments would be their own cost centers. So we accumulate costs per department. So if we have two departments, for example, mixing and roasting, or blending and roasting, whatever they call it, I forget. But if we have two departments, we're going to accumulate material, labor, overhead costs for department one, and then we're going to accumulate material, labor, overhead costs for department two, right? So just overall job order cost system, each job is unique, each job is different, costs are accumulated per job. Process cost system, it is a repetitive manufacturing or a repetitive process. The products are similar in nature, so we're going to accumulate cost per process. per department, right? For example. So this slide kind of shows you the difference in the job order, the process cost system. So remember, job order system, we accumulate our three main manufacturing costs: material, labor, overhead. Those three costs are sent to work in process. When the job or product or good is completed, then it's sent to finished goods. And then once we sell it, it's sent to cost of goods sold, right? So we can accumulate cost per unit depending on what the total cost were for the job and then how many units that represented on the job, right? Process cost system is different because we're going to accumulate material, labor, and overhead cost per department. So in this example, it's showing us a core department, a felt department. So we're making golf balls in this example. So a core department, or not golf balls, I'm sorry, tennis balls, Lord have mercy. So we've got a core department, a felt department, a packaging department, and then finished goods. So we're going to accumulate material, labor, and overhead cost for each of these departments. Is how we do that with the process cost system. Okay, so again, the differences that we've discussed. Job order costing are for custom jobs or unique jobs. Costs are accumulated per job. Process cost system, we have to compute the unit cost of the products completed, and then the cost to be assigned to ending work in process inventory. The cost of materials and labor are charged directly to the departments in which they're incurred. And then indirect materials that cannot be directly associated with a particular department are charged to factory overhead. So we're going to compute the unit cost in each department by taking the total departmental cost divided by the number of units produced. And they show this, and I'm trying to get back to the page in your textbook. They show this in your textbook, and it's not a difficult calculation, but I just wanted to show you. So they show you this in your textbook on page 259. So we're basically taking material, labor, and overhead for the department, right? The total departmental cost divided by the total number of units produced. And that gives us the cost per unit. And we've gotten practice doing that before together in chapter 3, if I'm remembering correctly, chapter 2, I don't know. All right. So again, we're accumulating material, labor, overhead costs for each department. So the products accumulate costs as they pass through each successive department. And then the costs continue to move with that unit through the departments. So to record the cost, right, we have to record the cost of materials, labor, and overhead directly identifiable with a department, and we charge it to that department. And then also the cost of the factory services departments would then be allocated to production departments. And then the cost added by prior production departments are carried over to successive departments. So just thinking about that tennis ball example that we looked at a few slides ago, the cost accumulated in the coring or the core department where they put the insides of the tennis ball, right? So the costs accumulated in the core department are going to be transferred over to the felt department once they make it to that stage of the production process, right? All right, so this kind of shows us, again, how we are accumulating these manufacturing costs for each department. So you see in this department, this is the formulating department. This is the bottling department. So again, we're going to accumulate material, labor, overhead costs for the formulating department. And then once the units are completed in this department, those costs and units are transferred over to the bottling department. And again, we're going to accumulate material, labor, and overhead costs for the bottling department. So the cost of the bottling department are then going to equal the transferred in costs from formulating plus the production cost from bottling. That's going to give us our total production cost. And then we can divide that by the 2-liter bottles produced, the number of 2-liter bottles produced, which gives us then the cost per 2-liter bottles that would be transferred to finished goods. All right. Work in process inventories. And this is where it gets a little bit, I think, more complicated than the job order cost system, is because with these work in process inventories, we're going to have to calculate the equivalent units of production. So the number of units that have had all cost applied, essentially. So, you know, just to make the example easy for me, make the math easy for me, if we have 1,000 units work in process and they are 50% complete, then essentially we have equivalent units of production of 500 units, right? 500 units. If we have 1,000 units that are 50% complete, about 500 units are complete then, if that makes sense. Again, we're going to see examples. We're going to get practice with it. But that's really the primary issue with the process cost accounting system, is that the allocation of cost, the total cost between units finished during the period and units still in process at the end of the period. And so if you think about it, we'll have units that are in different stages of the completion process. So we'll have units, for example, that are started in a prior period, say units that we started in August, and we're completing them during the current period, during September. Or we have units that we started in September and they're going to be finished during September, right? Or we have units that are going to be started in September but won't be finished until October, maybe, right? So we have these units that we have to be considered, that are in varying stages of the production process and varying stages of completion. So equivalent production, again, total cost must be allocated between the units finished during the period and units still in process at the end of the period. This equivalent units of production is the number of whole units that could have been completed during the period given amount of work that was performed. Again, I use the example of 1,000 units. I think your book uses an example of 2,000 units. So if we have 2,000 units in our ending work in process ending inventory, right? We have 2,000 units in our work in process ending inventory, and those units are 50% complete, then we have 1,000 equivalent units of production, if that makes sense. Anyway, we'll get more practice with it. And then the stage of completion, like I use the example, your book is used the example 50%. That's the stage of completion, the fraction or percentage of materials, labor, and overhead cost of a completed unit that have been applied to goods that are still work in process, goods that have not been completed by the end of the month. All right, so here's that equivalent units of production. It says the number of units that could have been started and completed during the period given the cost incurred during the period. So if we think about this example, we have for direct materials, we have 10,000 units and all of the material costs have been applied. 100% of the material costs are complete. So that's 10,000 equivalent units of production, right? Now those 10,000 units are still work in process. They're still being processed. They've only had 20% of the labor cost applied. So then that's only 2,000 equivalent units of production for labor. And then again, those same 10,000 units now for overhead have only had 20% of overhead cost applied. So 2,000 equivalent units of production for overhead. So the production report, and I'm going to tell you what the first example is. it looks like the first example in our textbook is on page 264, the production report, and we're going to get practice preparing one of these together. But we're going to be looking at the number of units in the beginning work in process, the number of units completed, and then of course, the number of units in ending work in process. And what we end up doing with this production report and then the production summary is that we account for our cost, what we had at the beginning of the month versus what we had at the end of the month, right? And we make sure that we can account for those costs for each unit. So there's 4 steps to preparing this production cost summary. So step 1, determining the physical flow of units. Again, how much we started with versus how much were completed, and then what we have in ending inventory. Computing equivalent units of production, computing cost per equivalent unit, and then assigning and reconciling cost. And so when we look at this example of this production report, and again, this example is from a different textbook, because although in your textbook there are good examples, there were not good examples or any examples of the production report in the PowerPoint slides that go with your book. So I just borrowed some slides from another textbook I used at Lindenwood before. But anyway, it's going to show us each of these 4 steps on that production cost summary. So based on this data, it's going to show us this production cost summary, those 4 steps within the summary. So in March, we had beginning work in process inventory, 30,000 units. And then during, so this was at the end of March. So this would have been, you know, our beginning work in process in April, right? And then in April, we started another 90,000 units. So we had 30 to begin with, and then we started another 90. So we had a total of 120,000 units that we need to account for. And then we transferred out. So of those 120,000, we transferred out 100,000 completed to work to finished goods. And so now we've got 20,000 ending work in process at the end of April. And then so it's showing us with respect to percentage of completion, how much each of these. So in the beginning work in process, 100,000, or excuse me, 100% of direct material costs were applied, only 65% of conversion cost. Conversion costs are labor and overhead, right? With the units transferred out, the units completed, obviously they had 100% of material cost and 100% of conversion cost applied to them, right? They were completed, so they were 100% done. And then in our ending work in process inventory, those units have 100% of the material cost applied, but only 25% of labor and overhead, the conversion cost applied. So again, based on this data, we're going to determine and prepare that production cost summary. So here's step 1, determining the physical flow of units. So we're going to have a PowerPoint slide for each of these steps, and then we'll get to the entire production cost summary that puts all 4 of these steps together. So again, we had 30 to begin with. We started another 90,000. So that's 120,000 units we had going in April. Then we get to the end of April, we transferred out 100,000 to finished goods. So we've got 20,000 in ending work in process, right? So we've reconciled between what we began with and what we ended with, right? So now step 2, computing equivalent units of production. We see here that formula, the number of whole units completed and transferred out to the next department divided or plus the number of equivalent units in ending work in process inventory. So again, those equivalent units completed and transferred out, 100,000 units, they had 100% completion. So that's 100,000 units, equivalent units of production for materials, 100,000 units, equivalent units of production for conversion. Again, conversion being labor and overhead combined. And then equivalent units for ending work in process. Remember, we had 20,000 units in ending work in process. 20,000 units were completed 100% in respect to material cost. So that is 20,000 units, equivalent units of production. And then remember, conversion cost, labor and overhead, it was only 25% complete. So if we take that 20,000 units times 25%, that's 5,000 equivalent units of production with respect to conversion cost. All right, step 3, computing the cost per equivalent unit. So again, based on those costs, so the total cost of materials, the total cost of conversion, divided by the total number of units, equivalent units of production, gives us the cost per equivalent unit. So if we had total cost of 36,000 direct materials, and then that was for 120,000 units, then we have material cost of $3 per unit, right? Conversion cost, again, conversion cost being labor plus overhead. If we had labor and overhead of 485,100, and that was for the equivalent units of production, 105,000, that gives us cost of $4.62 per equivalent unit of production. Step 4, assigning and reconciling cost. Again, we're looking at what we began with and the cost of equivalent units of production that we began with, and then what we ended with, right? So units completed and transferred out, and then the cost of ending work in process inventory. And so if we go back real quick, and I want us to remember this, total cost accounted for 845,100. Remember, that's what we had as our cost at the beginning of the information. Production cost data, 845,000. So we looked at our total production costs, and then we reconciled and accounted for those costs based on the units completed and transferred out, and then our ending work in process inventory. Okay, here's what that whole thing looks like all together, right? Each step we see here. So the cost charged to production, that's what they gave us kind of at the onset or the introduction to all this. We needed to account for 845,100 in cost. And then we go through each of the steps and we see step 1, step 2, step 3, step 4. We had a slide for each of those steps. And then upon that last step, we accounted for those costs with respect to units completed and transferred out, and then what we have in ending work in process still. All right, and then the journal entries. So the journal entries are very similar to the job order cost accounting journal entries that we looked at. The difference here is that we have multiple work in process inventory accounts. So when we think about transferring material costs to work in process, for example, we've got, you know, in this case, 2 different work in process inventory accounts. So, you know, first, when we transfer, or when we accumulate material costs, we're going to accumulate material cost in the roasting department, and then we're going to accumulate material cost in the blending department, right? And then we see here, this is for the indirect materials. That's a debit to factory overhead, credit to raw materials inventory. That's exactly the same as the job order cost accounting, right? And now we see here with wages, again, we're going to accumulate wages in the roasting department and the blending department. This entry is exactly the same as job order costing, and direct labor goes into factory overhead. When we pay it, we debit factory wages payable, credit cash, right? So that those are exactly the same. Overhead entry should also look familiar to you. Again, we're accumulating overhead cost, debiting overhead cost, crediting some of these, what we would consider overhead, insurance, utilities, accumulated depreciation. Now we're applying in this 8th entry that it's showing us, we're applying overhead costs to work in process. So we're applying overhead to the roasting department. We're applying overhead to the blending department. Now here in 9A, in 9A, we are transferring some of these units from roasting to blending, right? So remember, work in process inventory increases with a debit, decreases with a credit. So here we're moving the units out of roasting into blending, right? And I guess blending is the last step before they're in finished goods, before they're transferred to finished goods, because that's what we see here in 9B. We're transferring it out of work in process blending into finished goods. And then finally, when it's sold, transferred to cost of goods sold out of finished goods inventory. All right, so the journal entries aren't that different. Really the main difference is that we have multiple work in process inventories. And depending on the last step before finished goods, in this case, blending is the last step. So once the units go through the entire blending process, then they can be transferred to finished goods inventory. All right, hopefully that was helpful as an overview of Chapter 5. And when we meet next week, we will start doing some of these calculations and exercises together. So bye, guys. Have a good rest of your weekend.